Today, we're excited to launch a new chapter of the Economic Report, the State of the Island Economic Dashboard. Please join me in giving a warm Island Good welcome to Susan.
Hello, everyone. It's a pleasure to be here once again. As James said, I believe that this is the 9th time I've had the pleasure of presenting the State of the Island Economic Report. And with all things, as you go forward, it's time to sort of mix things up a little bit. We've spent the last 3 years at this event talking a little bit about, uncertainty and when you have something like the COVID-19 pandemic, there's a lot of uncertainty that's created. And so I think most of the last 3 years, I've spent a lot of time in the presentation talking about, the signals that we would normally rely on don't necessarily give us the same guidance that they would in the absence of a shock like the pandemic. Well, so with that in mind, we're 18 months beyond those last restrictions from the pandemic being lifted, and we're starting to see signs that things are beginning to settle. There's more clarity in a number of areas, and there's less clarity in others. So where we're seeing a lot more clarity is in terms of inflation. I think everybody probably saw earlier this week the Bank of Canada has held the line on those interest rates that are causing so much pain for so many households. So we've got a better handle on inflation and where that's going. We're also seeing sort of a better understanding of what's happening in our labor market, and starting to see things start to come down and return to sort of a more normal pattern. Where we have a lot less clarity and a lot less certainty is around geopolitics. So we have a war in Europe that is going into its 2nd year. We recently had conflict break out in Israel, and China, a key trading partner for BC and Canada, is currently reevaluating its relationship with the US and its allies, and we're involved in those conversations as well. We're in the midst of a diplomatic rift with India, who's also a key trading partner. So this is creating a lot of uncertainty for our export markets and sort of what economic growth globally is going to look like going forward. And so as a small open economy, Canada's probably in for a little bit of reckoning. So and I think that's the first time in this 9 years that we've been presenting this report that I've stood up here and said, you know what, things are really going to slow now. And we could be in for a bit of a bumpy ride. And so domestically, why I'm thinking that is if you look at what's happening domestically, we're seeing shifts in growth patterns. BC was among the strongest economies in the country prior to the pandemic, and coming through the pandemic, we had one of the strongest recoveries. But right now, our growth prospects are not looking so great. We're looking to be sort of more average, similar to what overall Canadian growth is going to look like. Where we're seeing strength is in the Maritimes. Okay, so the Maritimes is expected to be one of the best performing economic regions in the country, which is not something most people would associate with the Maritimes. That's a place that we typically associate with high levels of unemployment and people coming to work in the construction industry, right? Because there's no opportunities at home. But actually what we're seeing is that those areas are starting to really develop and have really high rates of growth. Alberta is also expected to be one of the strongest performing economies going forward. And so that's a bit of a change since the oil industry has not been doing so well, and they've been struggling a bit over the last, over the 3 or 4 years prior to the pandemic. So all those things are shifts in our economic growth patterns, and they're being driven by, our reliance on population growth for economic growth. The other thing that comes around with population growth is affordability. And so BC has benefited from population growth, and Vancouver Island in particular has really benefited from population growth. But as that population has grown, we've seen affordability erode. And now we're looking at a period where we're not necessarily competitive with other regions. So going forward, maintaining growth on Vancouver Island is going to require more than just being a great place to live. And we heard a little bit from Ken Coots last night about his vision for how Vancouver Island can grow, about marketing, defining who we are, marketing that and, attracting certain groups to the region. So we're at a bit of a fork in the road here is how I would like to think about it. And we need to decide which way to go from here. And so if we start by looking at GDP, this is our standard measure of economic growth. So prior to the pandemic, BC's economy was expanding at somewhere between, around 3 to 4% annually, which is a healthy growth rate for an advanced economy. We had major construction projects happening both here on Vancouver Island, but in northern BC. We also had this significant migration from other parts of Canada and other parts of the world. And with the pandemic, we saw increased migration as people came here for the quality of life, and they suddenly had the opportunity potentially to work remotely. But now, with the pandemic behind us, growth is expected to be less than 1% annually over the next 3 years, which is, as I said, in line with the overall expectation for Canada, but much lower levels than what we're used to. A big factor in that is the current inflation and interest rates we're dealing with. So high inflation coming out of the pandemic led the Bank of Canada to raise interest rates 10 times over an 18-month period. Okay? And that has created a lot of difficulties for households. But as difficult as it's been, it's starting to work. We are seeing inflation rates come down. And, it's slower than everybody would like, but we are starting to see inflation rates come down, but we're still not close to where we need to be for us to see interest rate relief. So right now, the expectation is that inflation is going to be around 3% over the next 12 months and won't hit that sort of 2% target that the Bank of Canada has until sometime in 2025. And we're not going to see interest rates come down until, there's comfort that we're on that trajectory again, on that downward trajectory. And a big part of what's happening is that we're not seeing core inflation come down as quickly as we would like. And if we think about core inflation, that's when we strip out all those volatile things like energy prices, which can have a big impact. And so we're seeing that services are still experiencing strong demand and strong price increases. So it's the service sector that's keeping those inflation rates high. And as long as businesses are seeing strong growth and strong demand, they're going to continue to raise their prices, and that's going to continue to drive up our price level. And so that's until that levels off, we're not really going to expect to see much interest rate relief. And interest rates are going to be above what we would consider the neutral zone. And the neutral zone is sort of that area where interest rates are neither slowing the economy nor stimulating the economy. And that's sort of around it's somewhere around a 3 to 3.5% is where it would be considered to be the neutral zone for Canada. So that's sort of the overall picture of what we're dealing with in at the Canadian level and the provincial level. Here on Vancouver Island, what we see is the labor market remains really strong. Employment levels have continued to increase, and unemployment levels are low. Okay, so we're still below 5% unemployment, which is a very tight labor market. And anyone who's trying to recruit in certain occupations can tell you that those labor market conditions still remain tight here. This is not what we would typically expect when we're seeing those interest rates go up like that. We would expect to see unemployment rising as well as businesses cut back and consumer demand pulls back. But we haven't hit that yet because we have labor shortages and those tight labor market conditions. But the good news is that if you're an employer, we're starting to see job vacancies come down. So we are starting to see some of that pullback and things starting to slow. We're down from the peaks, the job vacancies hit a peak in 2022, and we're coming down sort of towards pre-pandemic levels. But that is not something that's being experienced in every sector across the economy. Okay, so if you're in sort of some of the higher skill areas, you're probably seeing some softening. In the labor market, it's probably a little bit easier to find people. Where we're not seeing those job vacancies come down as quickly is in some of those lower skill, lower wage sectors. So a lot of our hardest hit sectors in tourism are still having some trouble getting labor. And so you're seeing hotels not being able to operate at full capacity during peak periods because they don't have people to clean the rooms, even on a 3-day cleaning schedule. Restaurants are reducing the number of hours they're open or changing, their services. And so those businesses have pretty low margins at the best of times, so they're having to raise their prices in order to maintain viability. And as long as that's happening, we're still gonna, keep having that upward pressure on service prices is what we're expecting. But overall, the fact that job vacancies are coming down and employment is growing is a good sign. In the face of these high interest rates, things seem to be slowing down, but in a managed way. If we look at the composition of employment on Vancouver Island, this is where we start to see some structural changes that may help guide that discussion about which path we want to take. So if on the left-hand side is what we call the goods sector, and this is where we produce a lot of goods that are exported, a lot of things that we produce that get exported. So this is where you'd find forestry products. This is where you'd find aquaculture. This is where you find housing, okay, to support that growing population. And so relative to where we were in 2019 prior to the pandemic, we're seeing big declines in manufacturing. We're seeing a little bit of growth in sort of agriculture and some of those other goods. Big decline in manufacturing, big decline in construction. So the manufacturing, a lot of that is due to the slowdown in the forest sector, which has been happening for a while, but we're really starting to feel the effects of it. It's a combination of market conditions and fiber supply constraints. In the construction sector, we're seeing this big decline, partly related to the interest rates, which are slowing residential construction. So we're seeing layoffs there. There's also been some completion of some of the major projects, so that's partly there. But if we're not building houses and people aren't employed, well, where are all these people that are coming here going to live? So that's a bit of a red flag. But on the other side is what we call the service sector. And a lot of what's in the service sector are those things that support your local population. So this is where you find healthcare. This is where you find transportation. This is where you find things like professional services or your repair services, your hairdresser, and so on. But there is also some export industries in here. Most of those export industries would be found in what we call professional and scientific services. So it would be things like tech. There'd also be some movie production and things like that. So there is some export in it, but those export sectors are relatively small compared to the ones that are serving the local population that's there. So now if we look at business counts, what we see is this is relatively stable. We're not seeing a big decline in businesses. And we are seeing business formations continue, which is all good. So as with the labor market, these are all encouraging signs on the surface. Moving on to insolvency trends. Here again, if you look at the consumer, we're not seeing significant signs of financial distress yet, which, given the rate increases in interest rates, I think has been a little bit of a surprise to people. But if you come back to the fact that we've got increasing interest rates, but people aren't losing their jobs, they're still able to make their payments, then it starts to make a little more sense. One of the other things that's happening here is that there are people that are really struggling with the higher interest rates in their mortgages, but theoretically they could sell their houses, but they don't have a place to go. So in talking to our insolvency people, what they're seeing is people are just, they're cutting back on other things and they're still going to continue to make their mortgage payments, even though they would prefer to sell their house. But if they sell their house, there's no place for them to go. So that's kind of a different dynamic than we've seen in the past when we've had rising interest rates, et cetera. Businesses, on the other hand, have not fared quite as well as the consumer through this last 18 months or so with all these interest rate hikes and coming out of the pandemic. In Canada and in BC overall, we're seeing that business bankruptcies are above pre-pandemic levels. On Vancouver Island, we haven't seen that yet, so it's not quite the same, but it's certainly gone up a bit. And so where we're seeing sort of at the provincial and national level bankruptcies happening, those are in tourism and construction, so that's the bulk of what's been affected. And those are those businesses that construction's being affected by interest rates. Tourism had a really hard time during the pandemic and hasn't quite been able to recover. So those are some of the trends we're seeing there. Now, if we look at population growth, as I said, this has been a really big part of the story on Vancouver Island. But we're starting to see signs that it's going to be slowing too. You may have seen the Alberta Calling ads. So Alberta put together a marketing campaign to encourage people to come to Alberta because it high-paying jobs, affordable housing, short commutes. Okay, and they targeted that campaign at Vancouver, and they targeted it at Toronto. And it's been quite effective. They're actually rebooting it and doing some more. So that, makes it more competitive to attract people to Vancouver Island when you compare the cost of a house in Nanaimo with the cost of a house in Calgary, and you figure out that, well, Calgary's like half the price. So, if you recall, I said at the start that Alberta was one of those economies that was expected to have one of the strongest growth paths over the next few years. And so that population growth that I'm talking about, we're starting to see this trend where people are, we had net growth into BC from Alberta, and now we're seeing a reversal. That's part of the reason why Alberta is expected to have such strong growth, is because they're attracting people. If you look at what's happening in our key sectors, you start to see some of the trends that we've been reporting on since that inaugural report in 2015. They're just a lot more pronounced now. Aquaculture is BC's biggest agricultural export. And a significant amount of production occurs right here on Vancouver Island of both salmon and shellfish. But we're seeing salmon production start to decline. And that's because of all the uncertainty about the future of salmon farming and the regulatory environment that it would be operating in. And so what this means is that nobody's willing to invest in our salmon farms. And some of that stuff they're not willing to invest is in technologies that could make them sustainable and address some of the concerns about salmon farming. So, this is, the longer this situation continues, the less competitive the sector becomes. And this is a really important part of the North Island and a lot of rural communities. And so those are the same communities that have been seeing a lot of the effects of the decline in forestry. And the forest sector over time has been slowly shrinking, and this has been going on for a really long time. We have fiber supply constraints, then we have the lack of a softwood lumber agreement, now we have poor market conditions. We're seeing a lot of pullback in construction in the US because of the interest rates, so we're also seeing lower demand, lower prices. So, and that's resulted in lower production on the coast and fewer shipments out of our ports. And so this is sort of that, this is no surprise. This would be no surprise to anyone, I'm sure, in the room. This has been going on for a long time. This is sort of an industry in transition. As I've said before, will there be a forest industry on Vancouver Island? Absolutely. Is it going to be as big as it was? No. And that will probably continue going forward. Now, tourism is a little bit brighter than forestry and aquaculture. Tourism is something that was really, really hard hit by the pandemic. We had border restrictions, so we had a lot of domestic visitors come to Vancouver Island, but they came to go camping and they didn't do quite the same things, and the cruise ships weren't docking in Victoria. And so when the cruise ships came back, that really helped the tourism sector in Victoria, but even though we're seeing recovered visitation from the US and our cruise visitors, it's still below where it was in 2019. We're still not back, and it's going to take a little while to get back. We have seen increases in room rates, and that comes back to my earlier comment. Part of what's going on there is that hotels need to maintain their viability. They need to raise those room rates so that they can, pay their bills. And so on the surface, this all looks positive for tourism. Everything's going up. However, at some point, the question of value for money becomes a concern. And if you talk to the destination marketing organizations, there's starting to be a lot of discussion around, value for money when it comes to attracting events and visitors. And so speaking of attracting people, what we heard from Ken's conversation last night was really about how one of Vancouver Island's big strengths is its quality of life. And I think everyone in the room is going to agree with that this is a great place to live. But it's really hard to attract people if they can't find a place to live or a house that they can afford. So in 2023, there's been some, price corrections. I think it's about 8 to 10% if we look at the benchmark prices, and that's as of June. So that's not too bad, except it still costs $750,000 to buy a house on Vancouver Island. That's kind of the low end of it in most communities. If you try to go to Victoria, it's over like sort of in the $1 to $1.2 million. That's the benchmark price for a house. And so I know Ken was talking about attracting lone wolves, and maybe $750,000 or $1.2 million is fine for a lone wolf. But what about the people that are making those lattes for him and for those lone wolves? They're not really going to be able to afford that. So prior to the pandemic, we were seeing young people come to Vancouver Island for the lifestyle and the relative affordability. And that contributed to really strong growth in the labor force. I remember standing up, I think it was in 2016 or 2017, saying, we're seeing this reversal of trend. Yes, people are still coming here at the end of their careers to retire, but we're also seeing all these young people come back. And we're seeing growth in employment and growth in our participation rates. But right now, what we're seeing is a reversal of participation rates. And if we want to encourage people to come here and to continue to train those that have moved here, we need to figure out how to address housing, how to build more housing, and how to build it more quickly. And so that's kind of the overall picture on Vancouver Island right now, as we see it, which brings me back to the question of where do we go from here? So if we look at what the expectation is for 2024, I would say we kind of expect more of the same. Population growth is going to continue, but at a slower rate. The tourism sector and visitation to Vancouver Island is going to continue to recover. Right now, we still haven't got all of our international visitors back. There's some key markets where there's still not capacity and there's still some limitations on travel, like China. And as that comes back, that will benefit Vancouver Island and that. But in the meantime, our US markets are back and they're starting to travel again. Construction activity is expected to be a bit subdued due to those interest rates. And that's probably going to last through at least the first half of 2024. So we're not going to be seeing sort of a lot of construction, and that could put a dent in our ability to address that housing thing. And then our natural resources sectors like aquaculture and forestry are going to continue to face that legislative and regulatory uncertainty, along with not great market conditions for forestry because of the whole interest rate thing that's affecting housing. And so we'd expect to continue to see some declines there. So my question to the group is, things are going to be okay. Trends will continue. Are we okay with that? I'm seeing a lot of people going like this. There is no dumpster fire, to quote our premier from one of his former portfolios. There's no dumpster fire here. In the short term, things are going to be okay. People are going to continue to come here. They're going to continue to buy things and create demand for those service businesses. And Vancouver Island is going to continue to provide a spectacular quality of life. But what about the longer term? So we did some calculations just to come up with some estimates of GDP per capita. And what GDP per capita does is it measures it's a measure of the standard of living. It's one measure of the standard of living. It basically tells you how many goods and services are available per person in the economy for them to do. Higher values mean more goods and services and access to the latest and greatest. It doesn't say anything about the distribution of those goods. It's simply about how much is there for the population to consume. So if you look at this really stands out to me. A couple of things. First of all, on the far side, we have Canada. Canada's GDP per capita is not growing very quickly. Okay, it's between 2016 and 2021, or 2022, it really hasn't grown that much. And there are some indications that it's stalled and it may actually be starting to decline, because your GDP grows at a slower rate than your population, your GDP per capita is going to decline and you're going to have to, eat less, what we would say as an economist. In BC, our GDP per capita is below Canada's. Like, we have a lower level of GDP per capita than Canada as a whole. And on Vancouver Island, that's even less. Okay? And one of the things there that I thought was interesting, it actually surprised me, in a good way, that between 2016 and 2022, Vancouver Island's GDP per capita is actually growing faster than BC's. So the gap between BC and Vancouver Island has closed a little bit. And then I looked a little further into the numbers, and it turned out that there's some indication that we are seeing investments in certain industries like tech that are helping. But a big part of that is housing. It's that back to that real estate and population growth on the service side. Vancouver Island accounts for about 15% of BC's GDP, has about 17% of the population. So what that tells me is that we're not making enough investments in productivity and technology on Vancouver Island to sort of maintain that quality of life that we like so much. And it kind of comes back to what Ken was talking about when he was saying that Canadians are complacent and Canadians are okay with the way things are. And, it's okay that we don't have cell phone service all the way up the island highway, whereas if you go to the Faroe Islands, you can go through a tunnel and have cell service the whole way. So these are some of the things I think that we need to think about. We need to be making investments that are going to increase our productivity. That's things like the technology, like some of those things that Graham was talking about yesterday at lunch, about AI, and how do we use AI to be more efficient? How can we incorporate this into doing things? It's not going to replace people, it's going to make them more efficient. And if we can do more things with the same labor force, that means we maintain or improve our quality of life. Our export industries, which bring money into the country and the region, are in decline. And so rather than, growing export industries, we seem to be substituting that with, bringing in people in an effort to grow our economy. And that certainly is, we can't not have population growth. There does need to be population growth. But solely relying on population growth is not a good long-term growth strategy. So I look at this as a tremendous opportunity. So if in the longer term, we want to maintain and improve the quality of life here on Vancouver Island, we need to improve productivity. And we have a lot of the tools that have been built over the last few years in place to do that. So there's the free trade zone, which is a tremendous opportunity to grow some of our export industries. We've seen this tremendous growth in healthcare on the island. As we've had people move here, we need more healthcare services. Where are the opportunities to leverage that to define how healthcare is delivered, not just on Vancouver Island, but maybe this is something that you can define for other regions, and other regions will come to Vancouver Island to buy those services or develop those services. So the university is also a bit of a hub that you could use for that. So when we think about that demonstration that Graham gave us yesterday, there was a lot of talk about, AI could take over the world. Sure, it could take over the world, but I look at AI and those kind of technologies as a tremendous opportunity. Yeah, there are some risks and there's some things that we have to manage, but there's also huge opportunities if we're willing to invest in technology. And so we can either be part of the conversation or we can be an observer. And I think that's where we are on Vancouver Island. We can continue along that path of relying on population growth and the residential real estate to create economic value, or we can take a more difficult path and innovate. And then maybe we will have cell phone reception all the way down the island highway, if we were to do that. And so that's kind of, the room is a lot quieter than it usually is at this point. I know that economics is a dismal scientist. I didn't mean to be the dismal scientist today. But that's really about all I wanted to say about sort of the state of the island economy. Back to the initial thing that James talked about us introducing the dashboard. And this is about innovation too. You'll notice we don't have a printed copy of the State of the Island report distributed, and that's because we've digitized it. And this is the first step in moving to a delivery where we're able to provide more timely information on Vancouver Island in a more innovative way. And so if you want to take a look at what the digital dashboard looks like, it's available now on the VIA website, and it will continue to be available for the next 3 to 4 months into the early new year publicly. And then we'll also be providing quarterly updates to the data that's available quarterly. Not all the data is published quarterly, but we will be providing quarterly updates to some of the indicators, along with some commentary going forward to make it, as I say, a little bit more innovative, a little bit more timely. And then at some point, it'll just become a service that's available to members of VIA, or that you'll be able to purchase access to through a subscription. And so that's really my discussion today. And I'm willing to take any questions that Dan wants to throw at me.
All right, so we do have some volunteers here in the audience with a mic, so please stand up if you have a question. I do have a question to start us off here. Great with the alignment with some of the speakers we had around the impacts of AI, the challenges and opportunities on Vancouver Island that Ken Coates talked about yesterday, and many of the themes the Premier spoke about, the challenges we have around housing, affordability, opioids, and so forth. But another big theme that Ken spoke about, and we had several sessions about that here, is the Indigenous-led economy, and how that is such an enormous opportunity for us to be able to address many of the issues you've discussed. So can you speak to that a little bit in terms of where you see and the factors you've addressed here in the report, where there's opportunity either led by Indigenous communities, economic development corporations, as well as the partnership opportunities to address them?
Sure. Thanks, Dan. So we've done a lot of work on this economic participation for Indigenous communities recently, and last year in the State of the Island report, there was a section on Indigenous participation. And one of the things that is becoming increasingly clear is that the pathway to economic, to closing those economic gaps and addressing many things is through entrepreneurship, Indigenous entrepreneurship. And so that's support for the growth of Indigenous businesses and the development of Indigenous businesses. And so we know Vancouver Island has, one of the second largest Indigenous population in BC, and the second largest group of Indigenous businesses in BC. And so there's tremendous opportunities to grow that part of the Vancouver Island economy, but also by growing that, there's a lot of opportunities to address some of the other challenges that are being faced by Vancouver Island's economy by increasing the participation of Indigenous peoples, is what I would say. But it really has to come down to growing entrepreneurship. Here's a question.
Hi. I'd just like to ask a general question about when you look at the loss of productivity. I mean, I was actually always scan The Economist, and I'm looking at that, and what you say applies across all of Canada. What do you think is the reason for that in general? Is it the curse of resources? Is it the fact that we've increased our property prices by a whole bunch and everybody's kind of looking towards that to kind of see them through the next day? I mean, what is it?
How long do you have?
Yeah, give me the shortened version.
No,
I'm just interested in your
kidding.
ideas and thoughts.
No, I think there's a couple things if you look at it. Certainly, the resource sectors tend to be quite capital intensive, and so as our resource production have declined, we're not investing in other businesses that are capital intensive. But there's also some regulatory and tax issues that prevent growth and can discourage investment. So that could be part of it as well. There may be changes to the tax system that could help to encourage businesses to grow. So for instance, if you get to a certain level, and I'm looking at James here because he could probably tell me what that is. I think it's about $400,000. The tax rate on earnings goes up significantly. Oh, 500,000, thank you, James. But it goes up significantly, and so you don't see businesses growing. So there's also, we don't have harmonization of the PST and the GST, and that's not just BC, that's in a lot of different provinces across Canada. So there's a number of little barriers, and there's also doesn't seem to be a desire or like I said, it's, as Ken alluded to, Canadians seem to be okay with kind of taking technology from other areas. We don't, either we don't feel that we should be on the cutting edge, or we're not willing to be on the cutting edge, is sort of some of the general themes that come out when you look at productivity. And I think we're going to start hearing a lot more about this going forward, it would be my expectation, because we're at that crossroads, not just on Vancouver Island, but I think we're at that crossroads as a Canadian population.
I just want to touch on one point to make BC more attractive than Alberta. I'm born and raised Edmontonian, moved out here because it's paradise and has so much potential. But the biggest crux I hear when I go back is people don't want to come here because they have to pay the property transfer tax. So the affordability factor is absolutely compounded by a tax that, I'm in real estate, I haven't even got a clue what that goes to. And I think if you want to look at something that could be immediate and have an absolute tangible outcome, maybe it's time that we are lobbying more to see a tax that nobody knows what it applies to being removed to incentivize people to come here.
Thank you.
Thanks so much for your presentation, Susan. I share, I have a concern about productivity for Canada for sure, and really in our region. I wanted to ask you a little bit, just when we look at GDP as sort of a way of indicating it, recognizing the significant inflation in housing prices and how that skews GDP, right? So we can look at GDP, but I'm just interested in your thoughts about parsing out the effects of the real estate sector, house pricing, inflation, and those things when we think about GDP. Any of your thoughts there?
Yeah.
Because I'm trying to get at the productivity sort of thinking, because it feels a little tricky to, even with the last chart, right? I listened to your comments, but the charts, yeah, I'm just interested. Thank you.
Yeah, no, when we looked at that, we looked at real GDP, so we did adjust for inflation. And I did actually look exactly at that question, how much of that growth. So the contribution of real estate to GDP on Vancouver Island grew by 56% between those two periods. Most other sectors was between 8 and 10%. So it's really, it is having that big impact on it. What you see is that, we have seen a little bit of growth, but the contribution of resource sectors on Vancouver Island declined by about a percentage point in that GDP calculation. So it's like I say, in the short term, it's okay, but that's not a recipe for long-term success.
Thank you very much for the presentation. I was going to ask on worker productivity, but that was covered. But in my community, in the last census update, we saw the fastest outmigration of folks who are around 20 to 30 in the last 40 years. And when you're talking about cost of living for younger people who are working a lot of those entry-level service jobs, it seems to be reflected in the census data. And I was thinking also too, I think last year we saw the largest annual outmigration to Alberta is around 22,000 in about 18 years for BC as a province. So I was wondering if you're looking at anything in terms of those broader trends of younger people leaving the island as we get older retirees coming to the island. If there's anything we can do to maybe address that. Thank you.
Yeah, no, we certainly do look at the age distribution of people moving. There's a delay in the data, and that's one of the other things about that's getting more and more challenging is finding timely data, because the data is published with a lag, and it doesn't necessarily get as granular as you'd like it to be. And so yes, we are seeing that the first quarterly migration is showing we're seeing continued migration from BC to Alberta, but we only have data up to Q2 and we don't have the age breakdowns yet. So we do look at it, but I can only speak to what you've seen in 2022 so far.
Yeah, I'm just wondering about, we use GDP and we've been talking about using Human Development Index, these other tools. GDP works in this room, you go outside the room and see homeless people. It just doesn't seem to work for me, and Human Development Index captures the social side as well. I just wonder in the future if we'd be really kind of cool to see GDP and then the Human Development Index beside that, some of the differences. Just your thoughts on that as we look into the future.
We
Thanks.
fully support that. And one of the things that we are looking at is how can we have a more holistic measure? As I say, GDP is one measure, but it doesn't tell the whole story. It doesn't show that distribution, and it doesn't show what's happening for everybody. And so, yeah, having more holistic measures is certainly one of the longer-term goals with this, and we've been talking to that with Julie. We've been talking to Brody about that as well.
Yes, thank you very much for your presentation. It's always great to listen to what you have to say about us. And just in line of what was there, there's also something called the General Progress Indicator, which looks at, the ups and downs. We have negative from pollution and positives from, economic growth, and it would be good to sort of balance those things out to see how well we do. My question is, and it's sort of more general, but if you look at other northern countries such as Scandinavia and Norway, Sweden, Finland, they seem to do a lot better in terms of providing innovation and manufacturing. And what do you think we have to do as an economy in Canada to promote that and make us perhaps at least more self-reliant and hopefully can export to the rest of the world the way those Scandinavians seem to do? They are much more successful than we are.
Yeah, no, that's a really great question. Once again, how long do you have? But really, I think what it is it comes down to the investment environment, right? It's difficult to invest in Canada. We have a lot of barriers to investment. It takes a long time to build anything. It takes a long time to get anything improved. And I think Ken talked a little bit about this last night, where we need to be more open to attracting investment so that we can build those kind of companies and support the growth of those kind of companies and encourage those companies to grow. But if there's if it takes you 5 years to be told no to build something, that's 5 years if you're lucky, and $500 million. Canada's not seen as a place for people to invest in if we have those kind of barriers. We need to be more open to investment if we truly want to grow.
Hi, thank you so much, Susan. My name's Susan as well. I'm an innovator and a manufacturer on Vancouver Island, former lawyer, so I've done a little bit of provincial work as well, and my question follows on the innovation one. Over the last 4 years, we saw a ton of grants in the beginning. Now there's none. And I know from being in Alberta that they are investing a lot, and they want to be the innovation leader in Canada. Is that why their economy is starting to take off while ours is relying still on just the population growth? Is it because they're investing in innovation and manufacturing?
There's a couple things going on with Alberta. Population growth is a big part of it, so people are going there. Some of the attraction of that will be to be able to, work with some of those companies, access to some of those grants. We're also seeing a bit of an uptick in oil again. So there's more production of oil in the oil markets. So those are the things that are certainly, benefiting Alberta. But yeah, Alberta is definitely trying to attract investment. It's a much more investment-friendly environment than British Columbia is for startups, and they've actively put out those investment grants and are trying to fill their downtown office space in Calgary with tech.
Susan, thank you so much for addressing healthcare and bringing it up as a way we could drive the economy and the GDP on Vancouver Island. You alluded to creating a model that could be a model in Canada. Do you have any examples you can share?
Sorry.
You alluded to maybe on the island we could create a model for healthcare that could be used across the country and might have.
Well, so if you think about if you innovate something in one area, whether that's through the use of technology or it's through the use of a process, and then that can get applied to other areas. And this is how Silicon Valley grew up, right? It was the relationship with Stanford University and the spin-offs that came out there. It's just the spin-offs that come from innovation in one area that get, picked up in other areas, is what I would say. I can't think of a specific Canadian example right now. I'm sure they're out there, and Barney, I will email you as soon as I step off the stage and remember one. Thank you.
Thank you so much, Susan. Very insightful, lots to digest. There are lots of challenges, as you can see, that we face today and in the coming years. This helps to lay out where those challenges and opportunities are, as we've heard throughout the summit. But this information, and especially the manner in which that information is now available through the digital dashboard, we hope will be very useful for you in your day-to-day and your yearly planning. So thank you so much to you and the whole team at MNP and the volunteers who worked on this report. Very valuable, very much appreciated.
Thank you again. It's always a pleasure to be here. And I do want to say thank you to members of my team who did all the work on this. I get to stand up here and talk about it, but Andre and Dana and Martin are here today. But they're really the ones that put in all the effort to pull all the data and make it all come to fruition. So